Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
So, Nicole, looking at your implied volatility of VUI, if you had sold vol what you thought to be high on May 1st, which, again, might be right here or so,
right?
It might have looked good, but then all of a sudden on May 10th it's up here, and then the end of May it's up here.
Right.
And right, so that back to your point, it gets pretty hairy there. You don't really know that it's declining, and it's probably until the June period, right? So
right.
that's a pretty a tough month there to withstand that.
That's right. I mean, in the period before that, from November to April, that looks like the trading range of the volatility between, say, 13 and 9.
Right.
But just because it didn't trade higher than 13 in the past 6 months doesn't mean that it can never go above that, right?
Great point.
And so just because volatility, the reason we look at the relative range is because volatility tends to move like a rubber band. It tends to expand and then has to come back to the mean, right? It's mean reverting. That doesn't mean that it's doing it on your schedule. So you need to just be aware of that. And just because you're selling vol at 15 because it's so much higher than you normally sell, it doesn't mean you're not buying it back at 17 and so on. So, which I don't need to tell you that. I'm sure you have many war stories of your own.
And that's exactly right, Nicole. I mean, in theory, Philip's point is excellent, is that, yes, you want to sell high vol and buy it back when it's much lower, but as Nicole pointed out, high and low can be relative, and just because something is trading at a 6-month high doesn't mean it might go much higher, or, just because it's low, it might even go lower.
That's right. And again, if anyone needs the slides, I gladly will send you a copy. Please send a request to webinars@TradeKing.com. That's webinars@TradeKing.com. I know we're at 5:30. There's one more question here, I think, that I can address. Here, let's see. Okay, yeah, there's just one last question I think I can take care of. If you have any other questions, please send those also to webinars@TradeKing.com.
You see anything else, Nicole?
We can try and go through next time on December 14th. But the question here is, can you explain the probabilities regarding standard deviation? So let me go to...
Oops, sorry. Let me take that.
Yeah, can you...
My bad, yep.
No problem. Okay, so here are the probabilities. And again, standard deviation says that there's a chance of an event occurring within a certain range. And so the first standard deviation gives you a 68% chance, or rather a 34% chance of it going from, say, 735, which is the current price, down to 674. There's a 34% chance of that occurring of that happening at expiration between now, which was early May, and June expiration. The other part of that 68% is on the upside, which is between 735 here up to 792. And so collectively, those two ranges make up a range that says between 675 and 792 of 68% chance of the underlying being within that range. Now, the iron condor is structured so that you actually want to use strikes that are outside of that range. So basically what you're saying is the model says this is what is likely to happen, and so you're taking the stance of, okay, I want to play what is not likely to happen, and that's what you're doing here. So you're saying, well, I want to play outside of that range. And so that's why the success rate of this specific trade, or the projected success rate, would be 69%, as shown by the model using the inputs that I've shown you. And that is the likelihood of what would happen in combining probability with standard deviation. All right, Steve, I believe that is all for me. Again, thanks. I really appreciate the opportunity to be here. And, if anyone has any questions or comments, please send them to webinars@TradeKing.com, and join us for our webinars when you can at webinars.TradeKing.com.
Nicole, thank you very, very much, and I'm looking forward to, as all the other attendees are, your second session that will occur on December 14th. And for any of you that are interested in hearing more or learning more, you can jump right over to http webinars.tradeking.com and catch the last 20, 30 minutes of their webinar there. Nicole, thank you very much. Really appreciate it.
Thanks, Steve. It was a pleasure.
Take care now. See you on the 14th of December. Just want to remind everyone that we will have Tony Hansen with us next week talking about technical indicators. And she's a popular guest here at the ISE, and that's, of course, on November 9th. Jason Ayers will be back with us on November 16th, and then Mike Tusaw on November 23rd. So those will be the upcoming guests. And I want to thank all of you for attending. We had a nice big crowd again today. And watch the currency markets. Keep your eye on what's happening with the euro and the Australian dollar. They might give you a clue on what's happening with risky assets all throughout the world. You might see some trade setups. Please, again, keep your eye on fxoptions.com or bookmark that, as we have plenty of tools there. On behalf of the ISE, this is Steve Meisinger wishing you a safe and happy trading day tomorrow. Looking forward to you all coming back next week when we have Tony Hansen with us. Thank you very much. Take care. On behalf of the ISE, Steve Meisinger. Take care now.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.